Hey guys, welcome to this week's video. If you're new to my channel, my name is Lauren Conklin and I am a financial coach. Okay, so today we are going to talk about the best way to set aside tax money so that you are not panicking come tax time. So I hate to be the bearer of bad news, but it is your responsibility as a small business owner to make sure you're setting aside money throughout the year that you can use to pay your taxes. I do want to give a little disclaimer here because I am not a tax expert. I am not a CPA. I'm just giving some basic, very basic tax advice on how to put aside the money as a small business owner or an entrepreneur so that you are not scrambling when it's tax time. Now, specifically how your taxes work or will be collected are very specific to the state that you live in and also the way that your business is structured, whether it be an S Corp or an LLC or a DBA, sole proprietorship, etc. One of the main questions my clients ask me is, how much do I set aside for taxes? Okay, so as a general rule of thumb, it's suggested that you set aside about 30%, at least 30% of your income. And that is your income after you deduct all of your expenses, so really your earnings. The exact amount that you need to pay for your taxes will vary based on your specific industry, seasonality, and other external factors. But if you're setting aside at the minimum 30%, maybe up to 40% of your earnings, then you are in great shape to pay your federal and state taxes. Now, I always suggest that you work with a reputable CPA in order to make sure that you're fulfilling your tax obligations, but also because sometimes they can point out some areas where you can save money depending on your business structure. Using softwares like QuickBooks or Bench are also helpful because they have a lot of free calculators to estimate the amount you should save and also really helpful articles to read. The second question that I get asked all the time after we've figured out how much we should set aside for taxes is where to put it. Okay, so legally you do not have to have a separate account for your taxes. However, I would recommend it 110% of the time, okay? Basically always, because it's so easy and tempting to take the money that you mentally have set aside for your taxes and use it for other things like Facebook ads or a cool new piece of equipment that you really want for your business. So it's really important and crucial for you to set up a separate savings account for your tax allocation. That way it's completely removed from like your day-to-day dealings and all the temptation is taken away. It sits there, out of sight, out of mind. The other great thing that you can do is you can automate your payments into that savings account. So depending on the bank that you use, some of them have even these rules that you can set. So for instance, at the end of the month, take out 30% of the money that's in your account and send it to your savings account that you've allocated for taxes. Utilizing rules like that and automation is really helpful because it takes one last thing off your to-do list and it makes sure that you are strict about that 30%. Okay, so we've talked about the how much and the where to put it. So when should you start? Yesterday. Sorry. But no, you need to start now, okay? You need to start saving for taxes now. Now, if you haven't done that for now, going back to the last quarter, what you need to do is you need to look back at your income minus your expenses, take that amount and multiply it by 0.3. That will tell you what 30% is and put that amount into your savings account, your tax savings account that you've already set up. Okay, so the next question is, when do you pay the taxes? So if you are making more than $1,000 a year, which most small businesses are, then you're going to need to collect or set aside and then pay your taxes quarterly. Okay, so that's going to be April 15th, June 15th, September 15th, and then January 15th of the following year. If you want to join my free Facebook community, I post graphics with nice little reminders of when there are taxes due. You also should put those reminders into your cell phone. Even if you have a CPA that you use or a software that you use, it's really easy to forget about those dates because they seem to come up quickly. So it's really helpful to set an alarm with some alerts maybe a week or two ahead in your cell phone. And the last question that I often get when it comes to saving or setting aside money for your taxes is, what if I save too much? So what if at the end of the year, what I had put in there when I figure out how much I ultimately owe is more than what I need? Well, I mean, awesome, right? The good news is it's been sitting in a savings account, so it's been collecting some money and you haven't touched it. So you have three main options here. You can keep that money in the account for the next quarterly amount, or if you're worried about the end of the year coming up short, why not just leave it in there? It was already out of your mind anyways, so you might as well just leave it in there for a little security blanket. The second option is give yourself a little refund, a little, informal tax refund to yourself. If you feel confident that you have saved enough moving forward so you don't need that as a security blanket, well then take the money out. You could buy a little something for yourself, practice a little self-care, whatever that may be. And then the third option would be to take that money and invest it back into your business. It's already money that you weren't thinking was yours to spend. So now you could take that money and buy that new piece of equipment you really wanted, or invest it more in some marketing or advertisements, or take an online course to further your knowledge, which will help you with your business. Investing that money back into your business is a really great idea. One thing I want to warn you about, however, is if you do end up having extra at the end, do not think that that is an indication or a green light for you to lower the amount that you're setting aside. That doesn't mean that for the next quarter, you can just set aside less than 30% because this time you had some left over. Because things change and fluctuate so much, you always want to be setting aside at least 30% of your earnings, no matter what. Lastly, I really want to point out a method that's helpful for anyone that's a new business owner or new entrepreneur. When you're first starting out, you don't really know exactly what your growth is going to be. It's not exactly stable. You don't have previous years' statements to look at and use as a guide. So a really helpful method may be to use what's called a per payment method. So what that is as you get a payment, you are taking out 30% of it and putting it into that tax savings account. So instead of doing that on a monthly basis, you could do it per payment. And that sometimes is just a little bit easier when you're starting out in your business. This method is also really helpful if you have like a high value product, but there's low frequency. So it makes sense for you to take out 30% per product that you're selling or per program or service that you're selling. It doesn't really make sense if you have a high frequency and you're having to take out or calculate 30% of every single payment that you're receiving. Okay, so that is it for today's video. I hope you enjoyed it. Just to kind of refresh your memory, wrap up, we talked about how much to set aside for your taxes, and that should be somewhere between 30 to 40% of your earnings, which is after expenses. We talked about where to put it. We're going to put it in that separate savings account that's just for taxes. We talked about when to start saving for your taxes or setting aside for your taxes, and that was now or yesterday technically. And then we talked about some important dates that you're going to need to pay those taxes. And lastly, we talked about a method that's helpful for newer business owners if you don't have an idea or it's harder for you to estimate how much income is going to be coming in. Okay, awesome. So I hope you're inspired to get moving on this. I hope you're inspired to create that separate savings account if you haven't already done so, to calculate 30 to 40% of your earnings after your expenses come out and putting that into the account and automating it if possible, because automation is key. And then once you do that, you are well on your way to having a stress-free tax season. And your accountant or your CPA is going to love you as well. You're welcome, CPAs. Okay, well, this was super fun. I hope you enjoyed today's video. If you did, please give it a like below and don't forget to subscribe to my channel so that all my videos pop up into your subscriptions feed. And I'll see you next week.